Hello, Maverick traders. It's Joe. December 5th. It's Monday. Let's get into a market roundup. I'm going to give you my 2 cents on the markets. You guys know the routine. Take the responsibility for it, right? So, market analysis wise, it's a lot different of a day than we had from Friday. Actually, both days were down. One ended up or flat, and the other one today ended lower. So, how do we finish? Well, the Dow, the S&P, the Nasdaq, all lower. Nasdaq down about 2%, being the biggest loser of the three. The S&P just over 1.25%, and the Dow just shy of 1.5. The Russell's down 2.75%. I guess that would be the biggest loser. But of the three majors, the Nasdaq's still leading the way, right? Oil dropped another 3.25, and gold kind of bouncing around down 1.67. So we'll get the heat map in a little bit here, folks. But it was a general sell-off, a pretty good aggressive follow-through from what I think was Friday. Now the real news to me was inflationary fears are starting to creep back into the job market or into the markets. Jobless claims were lower. We saw a jump in non-farm payrolls, but the market shook it off on Friday and closed, came all the way right back. However, ISM services jumped up a lot higher than expected, along with factory orders. Both came out today, and I wonder if that just kind of shook things, shook the ground a little bit. It's kind of difficult to have Powell come out and say, you know what, I think we could ease as soon as the end of December, the end of this month. The markets just loved it, but then we get that non-farm and some jobless that, the market shook it off. But these two numbers today, I'm not going to say they're the total cause, but it didn't really help, showing that we still are showing some expansion in this economy. Remember, this is good. It'd be great for us to grow more, move forward. However, with inflation, it's not a very good thing. Advanced decline line, 80% decliners, 16% advancers, 4% pretty much flat. So this, once again, was a general sell-off, and I do believe it could be from some of these numbers. That's my opinion. Above, below the 50-day moving average, not a huge sell-off. A lot of the stocks are staying above their 50-day moving average at 68% and 32% below. Let's jump into these charts. So the big thing is where we are in the overall sense of stuff. And I like to say that come Thursday, guys, I was very optimistic thinking that we're going to move higher. Take a look at the volume associated with Thursday's move, right? Or excuse me, Wednesday's move, right? So take a look at the movement here with Wednesday's move. Powell comes out and says everything looks pretty good. Thursday we kind of digest things, and then Friday we come out with that non-farm gapped down, and I thought, boy, that might be it. We might give up everything we gained on Wednesday, and we didn't. We rallied back up to close higher. Today we did gap lower and continued lower because, once again, I do believe that we had a couple of bad inflationary economic pieces of data. So it really just depends on how long the markets can play with these, or if they are indeed scared, or if it's going to carry over, or if we are indeed at a very technical spot in the SPY. Now, Darren and Rob made mention of this on the weekend update or the weekend trading room, and I agree completely. We are at a pretty good resistance level. So this movement, the action as we move to the Qs here, was to be expected, and I'm not surprised that we hesitated and even pulled back a little bit. But it's interesting how on Friday we shook off that news on the non-farm. But following suit, the next couple of days or today, we've got a couple of bad inflationary pieces of information, and the markets decide to go lower. Now, this isn't a make or break. This isn't at the breaking point, I should say. This is a very good resistance area. And if we do see things start to break support levels, we start moving below moving averages, we see increase in sell-off, then we have something substantial. But for now, there's just a little bit of bad news associated with a pullback, and a pullback that was to be expected at a pretty significant resistance area. Taking a look at the heat map, everything participated. This is a general sell-off across the board, which also leads me to believe that it was something more macroeconomic than it was micro or anything short-term. It's probably something that the markets have been looking at, which leads me to believe, hey, inflation's not quite out of, or the confidence, it's still weighing on investors' confidence moving towards the end of the year. So the outlook, I'm just going to say at a +1 for the monthly outlook and a +1 for the weekly outlook. I've got to treat this as nothing more than a bull pullback for now. It looks like it today. It was a pretty aggressive move to the downside, but we did not close on the lows. We could slip even further down. with continuation in some bearish news. We don't have much left for the rest of this week, but the PPI, and even then we got the CPI next week, which I think will be followed a little bit more. So I don't know what the markets are going to do. I really don't. Technically, this is where I've got it at +1 for the weekly outlook, +1 for the monthly. Jumping over to our trades, I've got RTX and PFGC to the bull side. A couple that came from the trading room last week I still liked. DXCM and XLY sideways. XLY, which is discretionary, has slipped a little bit. We'll talk about it, but it's still holding true if you want to play something range bound or sideways. And then on the bear side, we got EW, Spotify, Amazon came back up on the list. So let's jump into these. Here's RTX. I liked it as a breakout above 98. You can see it here, and it hesitated with a inside day. So what's really cool about this, sorry folks, I had to grab my pin. We broke out and it looked like it was going to park, but then it gapped down and took off just like the rest of the markets did on Friday. And take a look at what we did today. We didn't come back down. We stayed inside. Volume's been pretty good across the board here, and I'd be pretty comfortable, I should say, not confident, but comfortable, of this staying between 98 and 100, moving sideways, or even slightly higher from here if you wanted to diagonalize it. Moving to PFGC, this is in a pullback. This was on my watch list as a breakout. You could see that after Powell spoke, everybody, hey, it looked really, really nice. But what I also like about this is it's not really falling apart. It's slowly pulling back. It's a little bit reluctant. It seems to be following suit with the rest of the markets, but it's not breaking down. So there's a pretty strong support level just below that 60 level, or right around 60. Let's move on to the sideways. This is DXCM, and I like this for a couple of reasons. It's kind of got a bullish flag pattern almost going on here, right? After a gap. So I know that these could tend to stay within the range for a little bit before they turn and move higher. Why I put it on the sideways is because of that. So I think that this 110 will hold if it revisits that. But folks, I wouldn't be surprised if it did come back and revisit it. And so giving it a little bit of breathing room around there would be cool. But resistance would be at the 120 level, so something sideways to up. But I think 120, I wouldn't expect it to get much if you're leaning towards the upside on this. But a pretty cool little flag pattern that you might be able to trade sideways in the shorter term. XLY, this is the consumer discretionary, and I think it slipped a little bit more today, but I kept it on anyways. I'd like to see a smaller candlestick here, but that's fine. The rest of the market sold off pretty good. Something like this would be kind of neat, but it has a really good level here at about the 146 area, 145, 146. I guess we can go a little higher than that. And it does have, well, this last support level is higher than the previous, which shows, hey, this could be a little bit more strength if it comes down and indeed tests this 140 level. So between 140, 145, range bound, you could play vertical spread somewhere in between that, up or down, for the shorter term. And yes, folks, I'm talking a lot about the shorter term. I have to echo what Rob and Darren said. I just don't see too much need to race into these markets and put money to work with only 3 weeks left to trade, basically 3.5 weeks left. So I just don't know what we're going to do, maybe pull back or consolidate. So that's why I kind of like the sideways stuff. Even if you are directional, like with our first one here, this is EW, and it does appear like it's going to break that 20-day moving average. I do like the volume today. I do like the candlestick today, and it'd be neat to see if it could float below this area here, right? So it's had some support areas. We know that what do you want to call that? 73 is pretty solid. But if it could just bleed off there, then we might get a revisit just below that 70 mark in the short term. However, like I say, I like the sideways stuff as well if you don't believe that there's going to be too big of a move either direction to the end of the year. Let's go to Spotify. This poor bugger's been beaten down quite a bit, and it looks like it wants to slide further. I've always loved this pattern. Looks like we got kind of a symmetrical triangle pattern. 80 seems to be a pretty good area for this to try to stick to, but this could easily roll right down to the 70 mark, maybe just shy of it. So sideways to down on spot for sure. And then Amazon, it's kind of neat to see it pop up on the radar, but it's just today's candlestick that I kind of really liked. is it closed on the low part of it, right below or around these areas of those lows set when it tried to consolidate. We know that that was a big point for it as it dipped its toe lower and said, nope, we're going to come back up, but only for a short breath because it looks like it wants to roll back down. So good confirmation on this would be below 90. Make sure that it's got the rest of the markets behind it. When you do get oversold bounces, this one will participate, and it can knock you around pretty quick. So don't bite off too much. Just play it lower and wait for the thing to confirm below the 90, and I think you'd have a better chance. So we're technically at a very key point on the SPY. Please revisit that Friday class or the weekend class because Rob zoomed out real quick and drew this trend line, and we are just right back at it at a beautiful bear rally that we have been experiencing for about a month or so. And so for it to roll over, it's expected. And we got a couple of pieces of bad news economically wise, and that's right there showing some signs of expansion. In the manufacturing ISM was not. It was showing contraction, but the services were showing expansion. Employment was high. Payrolls increased. So it's pretty interesting. And the manufacturing number is up, or factory orders. And I do think that's just a carryover from consumer. So we're still active. It's kind of interesting. Maybe Powell thinks that, hey, this is the top of the apex of the height before we roll over. If you folks follow my Wednesday class, I refer to it as transitory. So some of these numbers might be transitory, why we have signs of slowing, but other signs of expanding. So it could be that ball's at the apex, and when you throw it in the air and it's starting to come back down. We're right in that neutral area. So I don't know if the PPI is going to give us too much, but it's the only thing we got this week outside of the two numbers this morning. So I don't know if the market's going to react. It's going to be interesting to see what the markets do. Are they glass half empty or half full? It really just depends on the investors in these markets because I can make an argument for both sides. So just trade it technically. We know that we're going to pull back or at least consolidate here without some sort of good piece of news to shoot up and maybe squeeze out some of those bears. But we'll see. Just the beginning of the week. All right, earnings. We've got, I saw AutoZone and Toll Brothers. There's a handful out there, I'm sure, but those are the ones that jumped out. Two stocks I've traded before, and I like to keep an eye on. So keep your eye on those. I think they're tomorrow or they're this afternoon. Yeah, double check. All right, guys, thank you so much for joining me. We'll see you later on. Bye, folks.